So I would say one of the most popular use cases right now on our platform is that we can help facilitate basis trade on us and provide credit on it and underwrite it. So if you're trading through our infrastructure, you'll be able to get additional cash and the ridiculous capital efficiency to trade between CeFi and DeFi. Because beforehand, like hedge funds have been doing like basis trades themselves. But the problem with this trade, when you're doing it yourself, positions are disconnected. And like you have here, I don't know, like let's simplify it. Ethereum and short Ethereum. Basically, it's a delta neutral position that basically earns money on funding rates, right? So your P&L does not really move, but you earn APR because exchange pays you because you shorted this position.
Welcome back to the Block Fuel Podcast. We are back in the booth with Arkis CEO and founder, Serhii.
Thank you for having me. My name is Serhii. I'm one of the co-founders of Arkis. And what Arkis is Prime Brokerage, as you mentioned, and certainly the most recent news has had the really positive sentiment about institutionalization of the industry, maturity of the markets, and that certainly benefited us as well. Narrative is certainly changed much more positive than it was a few months ago. But what Arkis is, I guess, the main difference between hidden roads of this world and what Arkis represents and is trying to build is that we are not an entity that faces borrowers and lenders directly, Hidden Road, for example. We are a protocol. We are built ourselves up to be an instrument for institutions to facilitate credit transactions through our infrastructure. The way this infrastructure works right now is that we've built a walled garden with network of smart contracts connected to a margin engine inside of it. And the way it works, it's closer to the likes of Aave and Morpho rather than hidden roads of this world. Our smart contracts, they accept collateral, accept credit capital, connect borrowers and lenders, and then our margin engine manages risk. And the main difference, I guess, that would be between your traditional two-sided lending market, like Morpho, let's say, or Aave, is that our infrastructure is built on top of account abstraction technology. So borrowers, when they receive access to capital, they trade through our smart contract. They do not withdraw it. It's like margin trading. Binance, you give Binance collateral, Binance give you additional money, and you trade within Binance. It's the same with us, but you access other venues, other DeFi venues like Aave, Uniswap, Curve, Convex, Pendle, Hyperliquid, basically anything that you connected to so far. And while you trade, our margin engine evaluates position and liquidates it to make sure that lender does not lose any money. And I guess our special sauce is that we recently added CeFi to our universe. So we are right now the first prime broker who provides CeFi DeFi portfolio margin. We are master broker on Binance, Arkis, and Bybit, able to open sub accounts for our clients and connected our margin engine to not only recognize DeFi primitives and calculate P&L, collateral management for that, but also recognize P&L of spot and futures on centralized exchanges. So if borrower on one hand trades through our smart contract and on the other hand through our sub account, let's say on Binance or Bybit or OTX, then our margin engine and we as a prime broker will use this as one single margin account, as one single position, and provide you portfolio margin on it. A perfect example, I guess, of one of the most popular trades in crypto, like basis trade, would be here, right? So if you, on one hand, let's say you have staked this in our smart contract or some derivative of ETH, that is yield bearing, like LSTs or restaked assets, you have in our smart contract and you hedge it with short perpetual future position, let's say on Bybit sub account, our margin engine will see both legs, understands that position is delta neutral, and provide you 5x leverage that you can move freely between smart sub account. And
very cool.
This is our special sauce and what we are.
Yeah. So what's the team look like? Where are you guys based? And are you guys heading to a lot of conferences? I know Bitcoin's coming up, but I think you said you're not going to be there, but any conferences you guys are going to be at this summer or in the fall?
Oh man, it's just honestly, there is so many conferences these days.
It's crazy.
There is nothing more valuable. In my experience, there is nothing more valuable than having a face-to-face conversation with someone.
Yeah.
Find common ground, to find synergies. In my experience, we've got a huge Rolodex of potential hedge funds, credit funds to work with. And at some point, for some reason, conversation can get stale. But once you go to a conference, you have this one meeting, it immediately returns to the spark. It's just as simple as that. Even if there is like strong synergy, like something might happen in business where you do not prioritize it, but in-person meeting can easily reignite that and prioritize you again. So it's very valuable in that sense. But if you're going to too much conferences, it's just like recently we've been going too much, and it felt like I don't do any real work, just generating leads, and we actually need to
and
more
then you end up
strategic.
looking like me with bags under your eyes from not getting any sleep and waking up. And it's we just got back from Orlando, as I mentioned, and we're going to be going to Bitcoin Vegas. Then we have a little break for a while, but totally. And can we just take a quick step back? You started to go into a little bit of this, but just really spell it out for, we have a lot of institutional audience, but at the same time, we do have some retail that's coming over, folks that have been in the stock market and see all this coin economy that's starting to take place. DeFi, as you mentioned, right? And they're starting to say, okay, the yields that we're getting from the S&P are not nearly as cool or as interesting as we can get in this market. What is like a prime broker for those that are listening that are maybe newer to the space? Why is that important? Why did you guys want to add a layer of like DeFi to that?
Yeah. So prime brokerage itself, to just build immediately analogy, is like essentially Goldman Sachs of this world, the JP Morgans, like Citigroups, like investment banks like that, they act as a prime broker. But like main business of prime brokerage, I would say main function is sort of, I would call it aggregation, and the main business is credit. When I say aggregation, is that essentially what prime brokerage did for TradFi, it like the problems of portfolio managers of the old days was that they were working in a lot of jurisdictions with a lot of different derivatives brokers, and you can say their portfolio was fragmented. Very popular word in DeFi right now with all the blockchains. But it was similar analogy in TradFi as well. So a lot of derivatives, jurisdictions, different lawyers, and the prime broker is basically somebody who aggregates and have relationships with all these different counterparties in different jurisdictions that work with different assets. They aggregate them and are able to sort of service your portfolio holistically, no matter where your assets are and with which custodian. They can underwrite it and give you, for example, like provide you credit based on your own portfolio, wherever it is. And I guess, our idea in terms of DeFi, like me and my co-founders, we have a lot of TradFi background experience, and we witness firsthand like this market efficiency that TradFi has like these days. Like basically anyone with the biggest infrastructure, best access to data wins. And we saw like in parallel how this new asset class, new financial market, like DeFi crypto, develops alongside ourselves. And it's like Wild West, where there is a lot of infrastructure that needs to be built in order for it to reach maturity. And we saw a big opportunity to apply ourselves and build similar concept to prime brokerage in order to accelerate maturity of this market. And I guess the main difference between what I'm seeing across other players and us in the market is that it's very degen in the sense that everyone focuses on yield maximization. This is priority. But with institutions, they are not actually focusing on that. They are focusing on capital preservation. And this is our motto as well. This is what we are building for. We're building for you not to get 100% APR return on our TGE event on Binance and yield farming opportunity. We're building for you to access DeFi in the safest manner and get actually the best yield, but in risk-adjusted terms. That every cost is disproportionately more risky if you do not if not apply enough mechanisms to protect your capital. And this is like
that makes sense. The institutions and like, do you guys have like family offices or high net worth individuals that are using it, or is it mostly like big firms?
Exactly. I guess what has been impressive across our roles, that what we like to brag about is that, especially on lending side, On lending side, we have a lot of profiles that other projects are simply not able to onboard, like TradFi family offices. We
Okay.
also have insurance companies who are using it, or charities. The most kind of conservative profiles that would not be able to look even in a way of all these like votes with 50% APR promises and manual processes. So this is like we like already bridging it. There is still a long way to go for us to be truly battle tested and being able to accept the biggest TradFi balance sheets. But we're already seeing like a very positive trend and very positive reception from the most conservative institutions. So yeah, on lending side, if like to summarize, it's like credit funds, treasuries. We do have our own LP program as well. So some of the DeFi funds participate on lending side, and family offices and like TradFi credit funds, essentially, and high net worth individuals.
And what level of sophistication are these users? I mean, do they come from? Is the person at the insurance company come from a DeFi background, or is there like a layer of education you guys bring with it? Or do you guys find yourselves having to kind of explain how to use it, or most people walk in and they're like, okay, I've used similar products before, and you guys are the best. Yeah.
Yeah, I would say response to this question is like sort of like two-sided. I will start by saying that inevitably when you build something new and something not very explored, like in a new industry, within a new like sort of world like crypto and DeFi for this kind of investor, education curve is inevitable. So we do need to provide a lot of education. I would say that currently, like at this like sort of bootstrapping point, and as favorite Y Combinator phrase, do things that do not scale. I would say that at this point, to grow our business, we are almost investment advisors. We're exploring, we're explaining assets, we're explaining strategies, we are suggesting different like collaterals. We are constantly educating on how like should the investor protect itself. We even onboarding some like other solutions that will help them more easy to interact with Arkis. It's like new custody solutions that we are working with. We'll onboard them there and actually explain how to use it. So there is a lot of education, but they are pretty sophisticated on sort of on I would say ROI and opportunity cost of finance sort of understanding. They know like they know how to calculate risk in of assets. And if you learn like new asset, it will still have like similar characteristics like anyone else, like anything else. So they know how to calculate credit risk. They would just need like some explanation in terms of like how these new DeFi primitives work. But the beauty of DeFi is that it's essentially like built on the same principles that TradFi was created as well. And so it's all similar concepts. And
I didn't tell you I was pulling this up. You're like, what's he doing here? I went to Arkis' website, obviously public facing, saw the margin engine, kind of shows a little bit, how this all works. But, how can institutions trust this margin engine? If you could dive just a little bit further into how this actually works, and, hopefully the visual will help me at least understand it a little bit better, and I'm sure our audience as well.
Yeah, well, I would say this, this is our website, and we'll actually launch next week new website. So stay tuned for that as well.
Okay.
But yeah, it sort of like represents still like what we are about. And in terms of margin engine, I would say it's like part of our USP, and if you ask me, why are we doing this? And what like basically, why did you decide to do it, and why do you think you would be better than anyone else? What is this? What is your skill? I would say we're the best in the world in pricing. So we know how to price assets, access them, liquidate them. And this is like a necessary functions in order to collateralize something. So we are also masters of collateralizations. Like at this point, we already offer probably widest range of collaterals across the board of different brokerages to hedge funds, and not because they're the most like risk loving or degen, but because we have the best like pricing capability card, collateralized all yield bearing stable coins, all different LP tokens, Pendle PT tokens, delta neutral positions. What else is there? GLP token, hype token, among the most popular ones. We already have this as collateral. And what margin engine represents is like pricing agent, like a calculator that essentially calculates one single most important number, risk factor. And the way it approaches basically any portfolio is that it takes a look at the smart contract and sub accounts, takes a peek inside, and essentially calculates this portfolio value. And it calculates this portfolio value based on stress testing and scenario analysis. It does that in order to model out the worst case scenarios, the like disaster scenarios.
Right.
And based on that, on this disaster scenario, it starts proactively pre-plan liquidations. So at like, I would say with each block on Ethereum, it sort of has some liquidation plan in mind in terms of how will I liquidate this position across Binance, OKEx, Bybit, 1inch, other DeFi exchanges in order for lender to save their money. And I need to take into account liquidity, slippage, like all kinds of stuff to make sure that the money is safe. So it had planned liquidation. And based on this, we essentially calculate maintenance margin. Like how much amount of money there should be in margin accounts for us to be confident that we will liquidate in a certain way. So essentially, this dynamic maintenance margin is our risk factor. And risk factor is a very simple number. You need to understand it, but it's basically from 2 to 0, essentially. Yeah. But if it's lower than 1, then we essentially liquidate. We have like an alert system. We even give sometimes, like a proper prime brokerage experience. If there is a few levels of margin calls, we might call our borrowers by phone and say, guys, you need to top up or we will liquidate you.
Yeah.
And yeah, if it drops even lower, margin engine will initiate plan of liquidation, relinquish control from the borrowers, and liquidate position to make sure that lender does not lose any money. And I guess I would say that here lies one of the answers to the previous questions that you asked. Why do this in DeFi? What's the benefit between like TradFi prime brokerage and DeFi prime brokerage? It's smart contracts. I would say that every level of extrapolating like concepts like, I don't know, lending, borrowing, investing, trading from TradFi to DeFi, at each point in time, it's basically substitution of an entity, intermediary, right? Smart contract. And I think the beauty of like this sort of approach and this sort of liquidation is that smart contracts takes care of everything in automated way. So you cannot, if there is like a bank run, deep bank, you're liquidated. You cannot negotiate with smart contract. You cannot go to government and say, okay, guys, we need to bail out them because they are our friends and they are too big to fail. We do not have soft liquidations. We like smart contract only cares about valuations of assets. It doesn't care about counterparties. And I think like it's obviously more fair system. And I would say this concept like applies on all levels of this TradFi and DeFi comparison. So yeah, basically separating like this discretionary decision making to just pure unencumbered risk management is what DeFi and smart contract infrastructure offers.
Right. No, it's fascinating. And Ethereum, I mean, Bitcoin today, we were just talking, as of this recording, it's 109, which is, I think, close to the all-time high, if not the all-time high broke through. So super exciting. Ethereum just had a great month as well, right? They were up, last I checked, it was 40%. That was a couple days ago.
Finally.
And just been flying as well. But, in the inner circles, I feel like Ethereum has taken somewhat of a backseat to the MicroStrategies of the world, going on CNBC. Everything seems like Bitcoin right now. How do you feel like just about the state of Ethereum? Is there still a lot of interest you're seeing? Is it certain sectors that are leveraging this more? I know that Trump's sons are heavy in Ethereum right now, which is hilarious that all these politicians are out there and, just doing this type of thing. Coming back though to like the Ethereum ecosystem, what are you seeing right now?
There was a lot of backlash on Ethereum like lately, but to build like from someone who builds like an institutional product and talks to institutions as much as possible, I would say that even like now and before that, when there was even more backlash on Ethereum is still the only thing that really matters from institutional perspective. So, I mean, from our perspective, when we started our journey, one of the narratives that we were really caring about and trying to devise is not to build like only like this proper cross-margin technology and connect CeFi and DeFi, but to truly build multi-chain prime broker. And also that like we do cross margin not only between CEXes and DEXs, but between DEXs on different blockchains, like Solana, like Sui, Ethereum, like wherever, Base, Arbitrum. And it's still kind of the plan, but it's have been like sort of we've put it on the shelf. And why is that? Because when we started working with the clients, that when like in terms of volume, in terms of like security and like margin of safety that institutions like need in order to trade in terms of volumes and battle tested, I guess, environment, Ethereum is still the only one where where they can trade. So if from our perspective, we want to do like a 10 million, like let's say 10 million worth of credit with like, let's say 10 million worth of collateral, there is still like basically, I don't know, like 50 protocols that can handle this amount of liquidity with some of the assets without huge slippage. And for us to have enough sort of be confident enough that this is a safe protocol that will not be hacked. And yeah, all of them are on Ethereum right now. So if you want to do a transaction of this size, it's like only Ethereum right now still matters. I feel like there is a lot of growth, Base and Arbitrum. They are the next on our roadmap, and they are very exciting as well. But still, like Ethereum is just so much bigger than anything else.
You guys just, I saw, got $50 million in TVL as of 4 hours ago on Twitter. You announced that. And then this other tweet here from April 2nd. So this was about a month ago. You guys introduced this Arkis Prime Manager program. So can you touch on that a little bit? I think that's interesting.
Well, I mean, so I guess it's coming back to like, sort of our fundamental philosophy. We are not here to build like just another prime broker like Tokenized and Hidden Road, like some entity that is going like to take over the world. We're here to build an instrument for others to build upon. And what this Prime Manager represents is basically our tryout to help and sponsor and facilitate building of other credit funds or prime brokerages on top of us. So basically what it means, like these initial partners that we took on board are one of the most, I guess, prominent like credit managers on chain right now. They did like a lot of analysis of different collaterals for different protocols, risk management advisory, and the likes. And with us, what they will be able to do is to essentially build their own credit fund on top of us. They will have their own liquidity pool. To this liquidity pool, they will be able to pre-qualify unique like hedge fund as borrowers and whitelist basically any credit agreement that they want. They will whitelist any asset, any liquidity pool, any trading venue that borrower will be able to trade on with the credit capital that we will provide through their liquidity pools. So essentially, they will start building credit portfolios. We will bring capital to them, and they will decide with these credit portfolios what kind of LTVs, what kind of assets, what kind of interest rates, what kind of credit deals there will be. So this is, I cannot, like, I guess at this point, I would say that we're still in test phase for this concept, but this is some of the closest relationships and our biggest champions of our like decentralized prime brokerage model that we had like conversations with, and we would love to help them essentially build their own funds on top of us. So we will see how it goes, but we are super excited about this program.
Yeah, no, very interesting. What's the TAM look like for like, how many people could be using this, I guess, in the TradFi space, or how much money flows through prime brokerages in the TradFi space? And, let's say, are you guys at I guess even DeFi is at 1%, and in 5 years, 10 years time, like how much money do you think is going to start to transition over to the DeFi side?
Well, I mean, Yeah, as you're saying, I think this is like a very good question, and maybe you saw it in my eyes. But what we're trying
Mm,
to become eventually is to become prime brokerage of everything. So I don't
mm,
want to be like sort of like we are masters of collateralizations, not only of DeFi primitives, but we know how to calculate any asset in any market. We had experience with TradFi. We were like doing quantitative trading, discretionary trading, trading execution, building margin engines for traditional financial exchanges in TradFi. So we know
mm.
how to work with like, I don't know, equities, bonds, real estate
Oh,
trusts.
interesting.
So any stuff like that. And we are seeing clear trend that essentially one of the gateways for the biggest and the most conservative institutions to come on board is through tokenized RWAs.
Mm,
And we are seeing right now what's already there. I mean, the most popular one is tokenized treasuries, right? They've been here
mm.
for a while. Now we are seeing tokenized mutual funds, some tokenized real estate trusts. I think like tokenized equities at scale and tokenized bonds will be here at some
We've seen
point.
pension funds at all get involved?
Funds, I would say, in my opinion, like biggest DAOs of biggest projects right now are basically crypto equivalent of pension funds.
Rare.
They all
Yeah.
have huge bureaucracies, like similar risk profiles. But in terms of actual pension funds, not really. I think probably only BlackRock at this point can attract this kind of capital in middle,
Yeah.
for example. But yeah, I don't think any projects have it right now. And we have our own pension funds, as I said, like basically like the biggest DAOs with biggest treasuries. Like from our conversations with them, it's the same experience. First of all, it's
Mm,
huge bureaucracy, like because you need to vote through every decision in the DAO. It's really hard to change process because you need to vote it through as well.
right.
And yeah, I mean the scary thing for DAO and for like this amount of money people is to lose them. But this is actually in our like it's good for us because like there are very few solutions that care about capital preservation as much as we are. And yeah, what was the question? Yeah, it's sort of like
I was just, I think asking about just like 5 years, 10 years from now, like
oh
is
yeah, yeah.
5% of the money flowing through DeFi, protocols like yours, or is it, you know, 10%?
Well,
It's moving so fast. So I don't know where we land.
yeah, I mean, we definitely need like sort of more capacity. If we are talking about purely DeFi, there is not like too much capacity at the moment. But this is
Mm,
what we are here to solve. And I would say like projects like that are doing like yield bearing like stable coins that are like underneath like basis trades, they're doing
mm,
this as well, creating like money flow between CeFi and DeFi.
yeah.
And I guess, and this is one of our strongest suits because we are able to provide CeFi DeFi portfolio margin. We're able to sort of use the best of the both worlds. So
Mm,
DeFi has both, right? But CeFi has like liquidity, speed of execution, and funding rates. So I would say
mm,
one of the popular use cases right now on our platform is that we can help facilitate basis trade on us and
mm,
provide credit on it and underwrite it. So if you're trading through our infrastructure, you will be able to get additional cash and the ridiculous capital efficiency to trade between CeFi and DeFi. Because beforehand, like hedge funds have been doing like basis trades themselves. But the
mm,
problem with this trade when you're doing it yourself is that positions are disconnected. And like you have here, I don't know, like let's simplify it. Ethereum and short Ethereum, right?
yeah.
And with basically, and it's a delta neutral position that basically earns money on funding rates, right? So your PNL does not really move, but you earn APR because exchange pays you because you shorted this position.
Right.
But what you need to take care of is essentially proportion of two legs. When Ethereum grows in price, you need to add more money essentially to short leg. When it drops, you need to add more money to long leg. And
Yeah.
there is, and so well, you obviously don't have infinite cash. You need to withdraw from this smart contract and move this money to essentially to exchange. And there might be
Hmm.
delayed transfers, onboarding, like whatever. So you have cash
Hmm.
drag. You're losing money whenever you need to shift.
So Sergey, last question, just to wrap everything up. Everyone can come find you. It's Arkis, ARKIS.XYZ. For those that are listening that are, interested in the space, awesome. Glad you guys are learning. For potential like partners of yours or upcoming could work with you, what types of companies or people that are listening should be reaching out?
Yeah, well, I mean, like we sort of like work with we are two-sided marketplace, you can say, like working with both borrowers and lenders. On borrower side, we are fully focused on institutions. So if you manage a portfolio, you're a hedge fund, and you heard some of the trade during this podcast that you've been executing, we certainly can provide you with some leverage and more capital efficiency, and maybe provide you with some ideas for new strategies, like, for example, basis trade. We'll be the only prime broker or credit provider that will be able to underwrite your basis trade and give you more capital to manage it between CeFi and DeFi with portfolio margin. And on the other hand, if somebody is looking for credit yield, credit risk profile, focuses on capital preservation, and wants to access portfolio made out of 10 hedge funds, credit deals, then yes, please reach out and build your own credit fund with us.
Amazing. Well, Serhii, thanks so much for your time. Everyone check out Arkis on Twitter or X. That's at Arkis, ARKIS, XYZ. Glad to have you on. Love to have you back.
Thank you. Absolutely. It's been a pleasure.